Richard Britten-Long, founder of St Paul's Property Trust. It's good to catch up with you again.
Well, it's very nice to see you again, Ali Khan.
No, thank you.
You're looking fitter than ever.
Well, you're looking very well yourself.
All right, let's get on with this.
Richard, last time we spoke, it was Mindspeak. You made this tremendous presentation. You explained to us the opportunity. Can you tell us where we are now?
Yes, I think what we've got here in Kenya, I mean, don't forget the last time we were looking to float or issue the company, St Paul's Property Trust, on the Nairobi Securities Exchange. We had a situation here at home where we had cost of capital going through the roof, interest rates at 25% or 20 to 25%, return on short-term bonds at 15%, and massive upheaval in the markets, which I think we've made the right decision.
Yes.
And I think I told you at Mindspeak, we decided that actually it would be safer to withdraw from the situation at the moment and then come back a little bit later in the year.
Yes.
And here we are in June, and I think that was a very wise decision because indeed things have absolutely calmed down.
Yes.
And I think the governor of the central bank should be congratulated for doing the most outstanding job. We've got sort of stability back, which is great.
Yes.
I think from a general market point of view, from where I'm coming from, Ali Khan, I think there's a sort of a drift towards safety now, because even since Mindspeak, we've seen Chase get into trouble.
That's right.
And that followed Imperial Bank. So I would have thought that there's a general drift, or maybe a slow drift towards safety and safe havens, and that is definitely what St Paul's offers. As far as we're concerned and how we're going to get to the issue,
So are you now in the process, or where do you stand with the issue? I mean, when can we expect realistically to come to the market?
Well, this is all subject to the CMA, Central Market Authority's approvals, which is absolutely paramount. And indeed, I think they're being probably quite a lot more stringent than we expected. But we welcome that because we want to be as transparent as we possibly can. So the process is taking a little bit longer than we expected, but we have submitted our application, and I hope fairly soon we'll get some kind of response, which will hopefully lead to a float in July.
Excellent. At the stock exchange.
On the stock listing. No, we're going for a GEMS listing.
Yes.
Which allows everybody to come in.
So let me just now take you back to the UK. We've got every time one turns the newspaper or puts the TV on, there's this obsession.
You're going to talk to me about Brexit, aren't you?
That's it. Tell me, how is St Paul's Property Trust vis-a-vis Brexit? Because there are a lot of nerves right now about what might happen.
Well, the UK property market as a whole has completely slowed down.
Yes.
And it did do...
Is that pricing in?
No, well, it has been priced in to a certain extent. I think there's been a bit of drifting in yields. In other words, they've gone up a bit, so the prices have softened but only very slightly. We're talking about bips, we're not talking about 2 or 3% movement. But more to the point, everybody's sort of sitting on their hands.
Yes.
January was an extremely busy time, but since the end of January, February, March and April, people have been sort of hesitating. There's no real buyers and no real sellers, but certainly in central London. But as St Paul's has got nothing, we don't even look at central London. We all look in the...
Well, why don't you just explain that briefly? Because when I looked through some hard data, it seemed, your strategy, which was more regional, outside the city of London and London, was performing really well because the activity levels in the regional side looked higher than they were a year ago. Is that your strategy?
It's very much our strategy. You hit the nail perfectly on the head. No, we don't buy in central London because it's too expensive. We also focus entirely, if you remember, on the government or government departments as our occupational tenants. And there's a general drift, and has been for some time, since about 2003, out of central London to the provinces. So by default, really, if we're going to match and meet our very strict criteria of the tenant being government or preferably central government, or we would go to the NHS, which is the National Health Service, or we would go to the Manchester Council or City Council as a covenant, because it's quasi-government, if you see what I mean. the attraction for yield. Everybody's been chasing yield.
Yes.
But we're in a market and a climate where to get any kind of yield is extremely difficult. So your returns outside of central London are definitely higher.
Can I just go back to that point, because you are selling to people who are in Kenya, and just reiterate that point that all your properties are let out to the government, or
excuse me.
Yeah, or a quasi-government institution.
Yeah, we are terribly risk adverse, and
Yes,
can.
yes.
Do you remember me bringing this up? I mean, our main fear is that the income stops.
Yes.
Now, the British government won't default. I mean,
No.
God help us if it does.
No.
It's like the American government defaulting. So it's the reliance on that income stream which is so important, because that delivers a dividend to our shareholders. If you dilute that, you're getting a higher risk, and we don't like to take risk on the covenant, put it that way. Now, you're bound to have a property which is a large office block, for instance, which may have a coffee shop at the bottom, or indeed a chemist or something like that. But it represents such a small proportion of the overall income stream that it doesn't really affect it, if that makes sense. But yes, the regions have been growing, and the growth in the regions is a great deal higher than it is in London at the moment, because I think everybody's drifting towards yield.
Yes.
Properties in the region tend to be 100, perhaps 200 basis points higher in yield terms than they would be in central London. But people like central London. But
Yes.
don't forget, I should think 80% of the investment in property, in commercial property, in the UK comes from wealth funds, sovereign wealth funds, foreign investors.
Tend to congregate.
And they love London, because it's touchy-feely stuff. But people from Kenya are a great deal more sophisticated. They've heard of Manchester.
Yes.
They've heard of Fulham, for instance.
Yes.
I know that's London, but
Yes.
because it's a football city. If that,
Yes.
But they've heard of Birmingham, and they've heard of Edinburgh, and that's outside central London. And that's where the growth is coming from.
Can I just touch on one comparison? You know, when you look at real estate here in Kenya, yields are actually quite low in comparison to the cost of money. So, for example, if I wanted to purchase a commercial property, let's say the rental yield was 6%, I'd be borrowing money at something like 14 or 15.
You have a negative
carry.
Totally negative carry.
Tell us about the carry in your business.
Well, we at the moment are living in a situation or in circumstances of incredibly low interest rates in America and in Europe. I mean, it's extraordinary, and they've been stabilising there. And there's talk now about the Fed possibly raising rates in the autumn, but they keep talking about it, don't they? And they don't seem to do very much about it.
No, that's right.
But it's a simple arbitrage.
Yeah.
If you're buying a property at 6%, let's take, is that the figure you gave in Kenya? My cost of money, if I borrow at 50% loan to value, so I leverage it to 50%, is probably about 2%. Wow. So I've got a 4% arbitrage.
You've got a positive
400 basis points positive arbitrage.
Because I think it's difficult.
Or surplus. I think it's unfair to use the word arbitrage, but the surplus income.
Yes.
It would be
so
about
structurally, you know, it seems a much sounder investment in the sense that it is a positive carry. You're not relying on a sort of Hail Mary pass and maybe we'll get a big capital gain. You've got positive carry there.
You've got positive carry in cash flow terms, Elikan, but if you look at it in American terms, the yield usually means the capital growth and expectations of capital growth.
Yes.
So while you've got a negative return in Kenya property, if you're taking that example, in cash flow terms, you have seen the most extraordinary and exponential growth in values in this country.
Capital gains.
And it's capital gains. So put the two together, and it's probably going to be quite a good carry.
Yes.
But you have to suffer the cash flow deficiency to start with. So I wouldn't dream of knocking a property in Kenya.
Yes.
But there must be, I mean, we know it's been such a strong market here, and I suspect there's some very sophisticated investors who've made an awful lot of money.
Yes.
And I'm possibly suggesting that St. Paul's provides an alternative.
It does.
And perhaps a little bit more of a safe haven. Take some of your profit, perhaps, and put some of it into the UK. I mean, after all, you can be a landlord in the UK.
Yes.
For $1 million shillings if you buy St. Paul's.
That's just amazing.
And you don't even have the hassle of collecting the rent. You're a landlord, you get all
I
the
got you
privileges,
collecting my rent.
and I collect the rent for you. and I give it back to you as a dividend, which is an interesting point.
That's an extraordinary point, because I mean, if you really want, first of all, I mean, what I know is that the connection between Kenya and the UK is very, very strong, historical.
Yes,
I've been over
I think we're all comfortable with each other.
Very comfortable with each other, and the big communities of people. So there is an aspiration to own real estate in the UK. But it's beyond a lot of people's means. So what you're saying here is you're democratizing the opportunity, aren't you?
That's a wonderful way of putting it. I mean, this pluralizes it, I would put it that way, so that everybody's got the opportunity to come in at a million shilling level if they want to. I frankly hope there'll be some institutions who put more than $1 million shillings into it. But yes, it gives everybody the diversification that I think a proper sophisticated portfolio possibly needs.
And then, you know, typically real estate is not that easy to transact, right? I mean, you know, you go and buy, you have to, it takes you a couple of months. Here, you're going to list it on the stock exchange, and people are going to be able to trade in and out on a daily basis?
Absolutely. Because you buy property.
So you're turning something...
And I'm giving you a liquid asset,
yes,
which is entirely immersed in commercial property let to the British government.
Yes. And just one final point on that, British government. You know, if you look at things like bond yields, 10-year gilts, I don't know, they're around 2%, I suspect.
I think you'd be rich to get 2%. You probably get a bit less than that.
How do you explain the fact that this real estate, same government guarantee, is giving you such an uplift in terms of returns? Is it just a market thing, or...?
No, it's not just a market thing. That's why I say people are chasing yield.
Yes.
But because of the Brexit position at the moment, people have been sitting on their hands. And I think virtually straight after the 23rd of June referendum, people will either pile in or pile out.
Yes.
But the pricing of sterling, for instance, as a currency, I think has already anticipated one way or the other the result of the referendum. I think you're asking why is a commercial property yielding 4, 5, 6%?
It seems to be the same credit.
Well, it depends on how long the credit's for. A 10-year gilt. Okay, I agree with you. It's probably about what 2%. A 10-year term on a lease, an institutional lease to the British government, depending where it is. Any kind. If it's in the middle of London, it's going to be 3%, or even central Manchester might be 3%. But we would look at more towards the 5 or 6% return.
Now, you know, it's interesting that you've thought about listing here in Nairobi. What informed that? I mean, I know you've had a strong connection. You're from here. You're born here, I believe, Richard. And I can see your mum's here in Kilifi. Lots of families. So obviously, it's a second home. But was there anything beyond that? I mean,
well, you can't take. I think this lovely old cliche expression, you can take the man out of Africa, but you can't take Africa out of the man. And I'm just one of those. No, I recognize, in all seriousness, the opportunity that Nairobi presents to not only the people who live here, but to the outside world. Nairobi, in my opinion, will become a very, very serious financial hub.
So do you think there's an opportunity for Nairobi to play a bigger role in, for example, the real estate capital markets? You know, at the moment it seems to me you've just got South Africa, really, which has, you know, a developed REITs market, etc. We've just had one Standard REIT. Do you see this as deepening the real estate capital markets, the listing here?
I think that the whole REIT syndrome has got to be looked at in slightly more detail. The Standard REIT was probably a success. It addressed various opportunities, and they raised quite a lot of money. But I think what I'm trying to say is that I don't see no reason why Nairobi shouldn't dilute the influence, in fact, of Johannesburg. It's certainly, I think, a bigger hub now than Cairo. I think that's a matter of fact. You better check that. But I've heard that, and I have every reason to believe it. And I think it's probably the third biggest financial centre in Africa. And of course, if you go into South Africa, you take a huge currency risk on the rand.
No, that's right.
And I don't think I have to tell you that the results or the returns on if you'd bought real estate, for instance, in South Africa, 3 years ago,
Yes.
you'd be looking a little bit sorry for yourself if you had to convert it back to Kenya shillings from the sale of rand.
You were once telling me that you had some South African investors who came in and with yourself and into a company in the United Kingdom.
Whichford, yes.
Into
my
Whichford.
previous company. Yeah.
And I overlaid the currency with that investment. And as South African investors, they must have loved you, Richard, because they made a lot of money also on the strength of sterling.
Very much so.
Versus...
and that's what Redefine have done, have an extremely successful strategy. Their funds come from a huge number of investors, mostly institutional. There's lots of private ones, but let them speak for themselves. And they have invested very cleverly by buying, guess what? My last company, which had British real estate let to the British government.
Yes.
So, and they're not fools.
Yeah, absolutely.
They've done very well indeed, and it's a very stable sort of income in sterling terms.
So, Richard, you're hoping for the listing in July.
We'd like to see that.
We'd like to be at that ceremony when you ring the bell at the stock exchange. We're very excited by the prospect of St Paul's Property Trust listing here. I think it's going to be a big marker, sort of coming of age for our capital markets.
I think so, and I think people are becoming more aware of the risks involved with everything. Having all your eggs in one basket isn't necessarily a very sound strategy with portfolio management in any case.
It's not considered sound at all.
But you know, everybody loves property because they understand property,
especially here.
And Kenya is becoming a huge pool of wealth. People have said to me quite often, why did you come to Kenya? Why did you raise the money in London? Well, we do that, but nobody else is raising the money to go and buy property in the UK.
Yes.
So why shouldn't we be the first? I mean, it's an opportunity. We're in businesses like anybody is, and I recognise the sophistication of the Kenyan investor.
And finally, have you had a good interest from people here?
I'm very, very, very happy with the responses and the interest we've had from both individuals and from the institutions. Fantastic. I feel very confident. I know they understand it because we're not building a bridge, or we're not an engineering business, and we're real estate. Everybody's so comfortable with real estate. It's more a question of demonstrating or showing people how real estate functions in the UK compared to Kenya, where our leases are much longer. We have something called a fully insuring and repairing lease. The tenant has to do everything. There's no hassle involved. Here you've got to go and clean the windows, do the lifts. You're in charge of everything as a tenant. And in my case, my tenant gets to the end of his lease, and he's got to put the building, which I let it to him 25 years ago, back in the same state it was when he got it.
Wow.
It's you haven't got you haven't got to go and mend the fridge.
Yes.
You've got to go change the carpets. You haven't got to go and change the light bulbs. And I'm being serious. That's the responsibility of the tenant. And that is where it's a great deal different than here. Not entirely. I mean, things are changing here.
Yes.
And it's becoming a great deal more sophisticated, and I appreciate that very much. But come on.
Yeah.
How cough out $1 million, Bob, and...
Yes. No, I think it's an extraordinary offer, and the fact that when you think through that you're bringing liquidity to an illiquid asset, that you're making it tradable on a regular basis, I think, and you're producing a sort of enhanced yield product with a built-in hard currency hedge.
If I may, just take just make another point.
Yes.
And I know you haven't asked the question, but I'd like to make the point. Let's just do another sort of apples with apples comparison.
Yes.
You invest £1 million in Kenyan shillings, which is 145 million shillings, in a property in Nairobi.
Yeah.
And it's yielding, should we say, 10%. You said 6, let's say it's 10.
Very unlikely.
Let's say it's 10%. But let's just say it's 10%. And you don't borrow any money.
No.
You don't borrow any money at all, because the leverage cost of 15% gives you the negative you were talking about. So you're getting a nice 10% income. But you've got to pay tax.
Yes.
And you've got to pay for the service charge, which you might be able to recoup from your tenant. But is the tenant good enough, and does he have a quality of covenant, and are he strong enough to pay your bill when you put it in? Because you've had to expend it, you put the bill in, will he pay it? Now compare it to mine.
Yes.
I'm getting shall we say, a 10% yield as well. Let's do apples with apples. There's no tax leakage from the UK to St Paul's, which is an Isle of Man-based company, because it's extremely tax efficient. And because the Kenyan investor happens to be St Paul's, which is listed on the Nairobi Securities Exchange, the dividends coming back to the shareholders are foreign earnings and therefore, at the moment, tax-free. So you're getting near 8 or 9%.
You're saying there's no withholding tax?
No.
Yes.
You're getting 8 or 9% in sterling terms, if you're doing apples with apples, against 10% return from Kenya, less your tax.
Yes.
And less your costs. Now, there are costs, obviously, with the UK one as well. But they're nothing. Your net return, I think, is higher.
It's higher. Plus, because the actual yield amount you're getting is higher as well.
No, we use the same.
I don't use the same one.
I'm trying to do apples with apples. I mean,
yes.
it can diversify from that.
Yeah.
But it's an interesting point.
Very, very good point. And that's an interesting dividend arbitrage, essentially.
Absolutely. We hope you can have your dividend in either sterling or in Kenya shillings.
You can elect.
Yes. There will be a box to tick. We hope. Subject, of course, to the CMA approval.
Yeah.
On all
which
this.
we hope is going to be soon.
I hope so.
Richard, thank you so much.
It's been a great pleasure to see you, to talk to you again,
It's
Ali.
been a pleasure. Thank you.
All the best.
Thank you.